Well, now China has posted its first monthly trade deficit in 6 years as the U.S. and China continue to square up to each other over the yuan. Well, Derrick, a currency strategist for Bank of New York Mellon, is here to talk about it. Simon, good morning to you. First of all, what do you make of news that China is running a deficit? Where has this come from? Is it Chinese consumers?
Well, a little bit. This is actually about the oil price rather than anything else. There was, in fairness, some car imports in there as well. And it really just shows that we are starting to see the Chinese economy continue to power ahead. I think one of the things we have to say, though, is that the news that was coming out was well flagged ahead that there was going to be a deficit for March. And it's also got to be said that really they weren't making the point that this is seen as being very much as a blip on the radar. I think we're very much going to go back towards seeing the surpluses that we've become very used to.
Right. And how concerned are you then about asset bubbles?
Well, I think that one of the things that obviously we've seen over the last 12 months with the highly accommodative policies that we've seen from the West in monetary policy, it has fed through into some quite remarkable moves, not just in China, but in a wide range of emerging markets, Brazil most obviously over the last few months. Do I think that we should be worried about it just yet? Possibly not. But I think that if we were to see monetary policy continuing the way it is doing for the course of, say, the next 6-9 months, then yes, we could be moving back to the sort of asset bubbles that characterised much of the mid-part of the last decade.
Now, the US seems to have adopted a slightly different, maybe a less combative tone towards China recently. What's the thinking, do you think, behind that?
Well, I think one of the real keys here was that clearly relationships between the US and China, not just on the currency side, but on a wide range of political issues, had reached a fairly frosty level by mid-March. And I think both sides effectively felt that the only way they were ever going to move forward was to actually take a rather more conciliatory tone. And I think this is why we had the meeting about, or the telephone call about a week ago between the two presidents. And it's on the back of that, we've got President Xi visiting this week to Washington as part of the nuclear talks. And I think that the currency side is another element of that. It's rapprochement. Both sides realise that there's a symbiotic relationship here. They need to work together. And the fact that we're talking about movement in the currency, however modest, is one part of that.
Well, let's talk a little bit more about that currency movement. What is the consensus on an upward revaluation of the renminbi this year?
Well, I think if we look at what most people seem to believe that a move between 3% and 5% is possible. The way it works is, in essence, there's a consensus actually taken within China. All the different areas, whether it's the Commerce Ministry or the PBOC or the State Administration of Foreign Exchange, all have their say. And at the end, the senior figures within the Chinese administration take a note of all that and then come out with a conclusion. It seems that probably the most likely thing is that we will have a widening of the trading ban of 1%, maybe a little larger than that. There may or may not be a revaluation. But what's almost certainly likely to happen is that the renminbi will be allowed to start appreciating again, slowly on a daily basis. So, yes, I could easily imagine in 12 months' time a quick 3% move in total occurring.
Simon, thank you very much indeed.
A pleasure.